All right, everyone. Hello and welcome to this rerun of the Balanced Trader. I didn't do the very best job the first time, so I'm going to have another go since I've got a little bit of time, but not too much time because we do have some important US data coming out. So just quickly outline what's coming. We've got PC price index. That's all coming up. We've got the Michigan consumer sentiment, all important data, and I'm expecting to see quite a lot of volume that comes in after that data set coming into month end. Now, might be a case that we've seen a lot of the action for month end already take place. I'm just going to turn down my squawk. Might be a case that we've seen a lot of action for the month end already take place because we've got a Monday holiday for the US, which is Memorial Day. So if you are taking the weekend off, have a good time. So I just want to quickly run through what is month end, why is it important, and how it can affect the markets, and how I've approached this in the past. Now, today's setup isn't the best one I've seen, but it's still worth talking about and just quickly going over for. So in my notes for the day, I've actually included a lot of high time frame charts for you guys to have a look at. So what is month end? Month end is just an opportunity for participants to rebalance their portfolios, and a lot of this can be done dynamically, but some of it is done on the day, prior day. I think some of them you start doing even the day after. I think it's silly that they all just rush to rebalance at the same time. But I've heard that a lot of asset managers are now rebalancing, into the next couple of days as well. So, but generally, it's an opportunity for high time frame traders to balance their books. What does that mean? I don't want to go into it too much because it's just going to run out. I'm going to run out of time, and I haven't got that much time because I want to try and trade the data where I have a plan. So I've put some links on my notes for you guys to have a look at. What is the month end, and how does it? That's a bit more technical. How do I like to view it? I like to view it as where is the monthly value area, and how far away are we from it? And will the market try to push back to that balance into the month end? That's how I look at it. That's what I think happens. We don't have the best example today in the ES, so I'm going to quickly flick to the euro. I put a trade on this one earlier today. The rebalancing tends to happen early on in the euro market, but I just want to, from about 7 o'clock UK time, when the European futures open, I just want to quickly basically show you on the euro, but it can apply to any other asset where where this takes place. So I'm just going to flick through. This is a daily profile sheet. I'm going to quickly flick to a monthly. So where is the market? So ignore the fact that this is the euro. Just take it as I'm explaining to you what I look to and look for in month ends. So when it comes to month end, what I'm looking for is, are we far away from value? Where is value? Value in this case is in the middle, where this big prominent profile is, and we've got these two secondary and tertiary profiles either side of it. So what am I expecting? I'm expecting some kind of movement back towards value, and this is this typifies and it gets accelerated into the closes. More and more participants rush to take this action of rebalancing their books. So basically what's happening is that they are holding a predetermined allocation of euros, bonds. It tends to happen a lot more in bonds and equities, but we get these huge moves in the euros month end and the dollar as well. So any asset, to be honest. So what happens is that markets moved sufficiently far away from value area for whatever reason, which I won't go into. Those participants want to rebalance their books, so they're looking to either if they're overly long or overly short, or their portfolio's got too big in one asset class, they'll look to move it back towards that value area in the middle of the monthly value. So that's the way I look at it. Why do their books get too overloaded with certain assets? Because as the month progresses, those assets appreciate and depreciate in value, and they tend to have like a fixed size and allocation for those assets going into the month. And That's how it works basically. So so going into today's market profile, I'll just go into today's market profile for the ES. So what's happening in the euro is we started the day at the top of this monthly range, and we're slowly trickling down. I'll just actually I didn't show you. That is the day's profile, and we had a really nice setup in the daily profile where we had this prominent area here, this high node area just above where value had been established, and as we failed to break above where we had a look above, we have now just trended down. We've done a little bounce back up, but I expect this to carry on potentially into the close. And look, after 3 o'clock into 4 o'clock, when we have the settles, I expect this to accelerate probably down to somewhere in this area here. It might not happen, it doesn't always happen, but we tend to get really big moves. Don't forget, we also got Monday's a holiday, but month end's actually on Tuesday. I'm just thinking that a lot of this business might get done already coming into the month end. But Tuesday is another day where I'll bring this up because that is the day. All right, so forget about the euro, forget about that one. Let's just have a look quickly at this month's setup. So where are we? What are we? We are looking at trading at the top of this daily range. These are the daily. You can see volume has accelerated into OPEX. It's tapered back down again, slowly. But going into month end, which is technically speaking next Tuesday, we do expect to see a pickup in volume, which are all these peaks and troughs. You tend to see peaks into OPEX and out of OPEX, and then and into the month ends and beginning of the months. So this is where we are. I'm expecting there's a potential for a push up into this little area here, 4120. It's a high volume node on the composite profile, which I will just quickly show you. This is the monthly profile. Where are we? We are trading at 40, currently 40.65. We're trading in the upper area of yesterday's P distribution. So as long as that holds, I expect this to maybe hold, build, and then maybe have a push for that 41.20, 41.50 area. Whether it does, I don't know, because in the back of my head, I'm thinking, well, okay, we've got this high volume area here. This is going to be chopped, difficult to get through. We might have a go, but we might fail just as likely and push back to monthly value area and repair what was yesterday's P profile. This P profile that formed yesterday is a bit of a short covering profile. P distributions tend to be typically short covering, as people who cover get more and more competitive. They're just holding price higher and higher as they're just getting squeezed out, and buyers are just holding. So these kind of P profiles tend to be quite weak, especially if they break below the upper node. And so I am looking for yesterday's overnight swing, sorry, not overnight, afternoon swing low in the US session to hold really well. And if it doesn't hold, then I'm looking for weakness to take the trade back down to the monthly VPOT, which is 415. And if it gets through that, I'm looking at the double O's, 90s and 70s area. That's basically in my notes for you to read and have a look. But I think I've basically put my plan down here. Weekly, yeah, it's all here. I think I might need to adapt a little bit more. I haven't, some of this stuff I've just basically been doing this on the fly, but I'll update my notes any minute now. But I'm looking to make sure that this area here, this upper P distribution holds, and if it holds, I expect us to then go and take out yesterday's highs and maybe push up higher. That scenario, actually, that's probably my second favorite scenario. So I'm just going to quickly, I've done it in reverse order. That is my second favorite scenario. So we hold above the overnight highs. Any push below 30s, I'm not interested in longs whatsoever. Counter that. So what is my preferred scenario? My preferred scenario is a test of the overnight high, just looking above these poor highs. We break them, create a little spike, little flush, see plenty of action up there, and then we just push back down, pushing through these weak longs that I think they're weak longs. And why do I think longs? I just explained, because I think it was it's a short covering rally. And then we push back down to my target of 40.15 and below. Why do I think all this is happening on month ends? And is it a case of, a lot of the rebalancing happened yesterday because we were below 40.15 yesterday and we pushed higher? That is most probably the case, but it's still going to be a rebalancing, and there's still participants. They don't all do it at the same time. Yesterday was Thursday. We've got Friday, which is today. We've got a holiday on Monday, and we've still got Tuesday. So it's a case of a lot of the volume will try to get done towards the end of the month, but I'm just thinking, well, is this the end of the month because we've got a holiday and people are taking long weekends? So that's just what I'm thinking, and that's why I'm prepared for today for that kind of behavior, because I am aware that there's this holiday that's messing things up. So I'm going to be looking for that early push to the highs, and if I see some, strong rejection, if I see some, a spike, especially, I'm looking to try and put my risk on with a stop at the high of that tail. If we get a spike, I won't be looking to necessarily trade the spike base for a push back up. I want to see that spike base fail and then for us to go lower. So I'll be looking for some kind of structure to take some shorts on there. It will be a tricky trade, and I might get it wrong. So, but it might be worth the aggravation of trying to get in, because if I do get it right and I do get in, I'm going to be getting short 70s and 80s and looking for targets down in the 40.10s, 40.15s, maybe even slightly lower. But okay, to the upside, I think that reasonable targets are 41.20, 41.50. Why? Well, because they are high volume nodes on the composite profiles, which are basically magnets for there were prior battles, and battles tend to be repeated in similar locations. So what else were we thinking about? So yesterday, just to quickly run through what happened yesterday, we had this open above where most of the volume, where balance was for the last 3 or 4 days. And also we've seen a lot of balance in here generally. And then we just kind of pushed from the open all the way up, left this trail of A's, this A period, this spike here. I use block profiles normally for visualization purposes, but these are all the A's, and they just got, we just rallied up, and B kind of covered a little bit, but then carried on going. Once we were above this 40.12 area, that was kind of the key area to be watching, because that was my target. I actually got long the open. I won't go into it too much because I'm running out of time. Oh, I've got a little bit of time, so I'll quickly run through it. So this was what happened yesterday. So yesterday we had some poor GDP data, and I sold it into the data. I took a quick scale out, but then it came back and I scratched it. So I had a break-even scratch because it should be coming back, but it was, which made me very upset, because I thought that, given the fact that we rallied up so much in the overnight session and holding near the prior day's highs, I thought we might get a little flush back down, but it didn't happen. But anyway, that's how it is. That's how it goes. So we saw this little zipper just holding so tightly into the open, and I just thought, well, someone's just absorbing anything that was, and you saw a lot of selling. You can see actually just before the open how much volume was being done here. Can you see what I'm squiggling at? Yeah, you can. Good. So I'm waving at this little area here where you just saw loads of volume. I was like, wow, that's a bit unusual going into the open. Someone was just holding that price about 10 ticks above yesterday's close. And I was thinking, okay, well, if you're willing to buy in such big volumes, then if that breaks, then you could get a flush lower, and you're going to, probably be liquidating that, or someone's going to be liquidating some positions there. But if we hold, then it'll be the other way around. All the guys that were selling, and we saw some huge delta going into that area. Did I put that out for you guys? I'm not sure if I did, but it'd be good. That was a really good one. I think I did actually yesterday's notes, just highlight it on the footprints because it was really obvious. And then when we broke that little area there, we very quickly gathered momentum to the upside, and we were starting to hit targets very quickly. I was scaling out my positions for the usual 5-6 ticks because I just wasn't sure about my risk. I was only trading small size as well, because I don't try to trade the open full size. So that was a little bit disappointing that I didn't put bigger size on, especially since I saw this high volume area here holding. I got out one clip here, one clip at the top of this area here, and then the next one I was holding to target at 40.12, and I got out 40.12, I think 40.11 3/4, something like that. Where we held and chopped here. Now this was the mistake I made, was I traded very early, very small size, carried it all the way up to my target, which was my initial plan. Well done, pat on the back, you did it. you get a prize. But then this little area here was holding, and I failed to spot that, in this convergent zone, this convergent trading stalk zone that Morad Askar kindly provides me. This little area here was a chop zone, but it wasn't too bad. It was relatively tight, and if you were managing to get long in this area, thinking, oh, you know what, we're just holding above this price structure. You've got this area here for protection, and if a stop below. But I was thinking, I just got out in that area. Do I want to be getting the trade back on again? And the answer was really yes, and I kind of wanted to, but I think because I had a bit of stage fright and I didn't want to look like I was just jumping into trades, and I was trying to set a good example, but by doing so, I was actually setting myself, I was being a bad example, because I saw that and I just thought that was a good area to look to get long. Anyway, once we broke this 40-12 area, which was the weekly VPOC, monthly VPOC, we then had a quite clean push, and we pushed all the way up to the 44s where we formed the IB. Then we broke the IB, we put out a little pullback, broke the IB. Look, the rally was quite strong. The trend up was quite strong. We never pushed back into this area here, but we pushed just above it, right? So if you can afford the risk, getting long just above it is worth it, but you might have to wear it all the way to the bottom of that area, which was too rich for my blood. This little hole zone at 5. So you could have looked to get long at the top of this little zone here, which would be, on days where we have really strong rallies, that's where you want to get involved. And maybe you want to get stopping out halfway in between there, somewhere like that. But anyway, we had this pullback into this area where number 5 is after forming the IB, which is normal. But then we know that, the IBs like to be broken one side or the other, and the likelihood here is, we've got this strong trend impulsing higher from the open. We've moved away from the weekly block where we built a lot of energy, a lot of called up energy, and then we've pushed up higher. So we've pushed up higher. So maybe looking for longs was the good idea, and I agree. But my brain was thinking, do you know what? I've seen these fail a lot the last few days, but I was looking for shorts up here actually. But then I quickly switched my mind after just seeing how strong it was, and I actually managed to get long in this area here on a pullback to the IB, expecting it to hold. I went on side for a scale, got out, and it came back, and I took a stop, and I didn't get back long again, but I just made a little money in this area here. Anyway, and then I managed to get long in this area here, just seeing that little area hold, I think it was, and then it just pushed all the way back up. I got out on the spike here. I just was scalping it. I wasn't doing a very good job of it. But nonetheless, just look, this is a typical, strong trend day. Watch it. There was a really nice double top to trade into on the close, into the close. I won't go into that, but there were a couple of nice double tops yesterday. There was one in oil, WTI at the highs, and into pre-close, and this one was pre-close as well. It just pushed up just into the close where we saw Delta then sort of start taking it back. So just a little quick tip. Yeah, that's a nice little double top. That's what it looks like if you don't know what a double top is, but yeah, it was into the close, so it was a bit tricky. Right, so going into today, I've kind of explained what I want to be looking for. My primary focus is looking for a failure of the overnight highs to then take the trade back through, and it's going to be messy. I expect to be choppy and horrible, which, month ends tend to be really choppy until we are through the data set, which is coming up. So the main one I really wait for is after Michigan. So after Michigan, we tend to get like maximum liquidity in the S&P after the open, of course. So around about 3 o'clock, we're going to see this just take direction maybe for the month end. If it doesn't happen, if I don't see the signs, if I don't see high volume, high RVOL, right, don't worry about it. It's sunny outside. I'm going to walk away. I've got an appointment to go and see some friends of mine at one of the trading arcades in London. So that's what I'll be doing. So yeah, good luck with today. And that's my quick little prep for the day, and an explanation about month ends and how they roll. So please, yeah, just have a look at the notes. I've got an entire library of month ends which I can reflect on, so I know roughly what I'm looking for because I've just seen so many of them. So I advise you guys to, when you journal, just to document this. Today is a month end, you know, or yesterday was a month end, or we're going into month end. This is a month end period. Watch out for it. We've got a holiday on Monday. We tend to, you know, I won't go into all that now, but there's certain characteristics for holiday trading. Watch out for that. You know, the only reason I know all this, what does non-farm payrolls look like? What does FMC look like? Is because I've got so many journals where I can see repeatable patterns over and over again. So it's really, really important to notice that, and also to understand context and structure. So where are we now? We're not far away from monthly value. Are we likely to see chop around monthly value? Yes. Might we see a pull back to the VPOC of monthly value? Maybe. That's what I'm thinking. But, you know, I'm not expecting too much because of the setup today is not fantastic. But yeah, best trader has strong convictions, loosely held, and that's kind of the way I'm going to play it today. I've got my ideas. If I see evidence counters that, well, then that's off, and I'm not going to take any trades, or I might take some trades, or I might take some scalps. But overall, just make sure you have a plan and trade it. And if it works out, great. And if it doesn't, just, you know, go over it and see where you've gone wrong for the day or the week or the month. So yeah, good luck with everything, and thank you for watching. And if you have been watching and you're one of the few people I'm going to see later on this afternoon, I'm very much looking forward to it. Okay, bye bye everybody.